Cofinix Exchange, your go-to channel for honest, simple crypto education. Have you ever heard traders talk about spot trading and future trading and wondered what the difference is? Both are the ways to trade cryptocurrencies, but it works very differently. In this video, I'll explain spot trading and futures trading in the simplest way possible, even a beginner can understand. Let's start. Spot trading is the simplest way to buy and sell crypto. When you buy crypto in the spot market, you actually own the cryptocurrency. For example, if you buy Bitcoin, that Bitcoin is actually in your wallet or exchange account. Futures trading is different. In futures trading, you do not actually buy cryptocurrency. Instead, you trade a contract based on the price of the asset. You are predicting whether the price will go up or down. There are two types of future position: long position and short position. Long position, if you predict the price will go up, then you take a long position. And short position is, if you predict the price will go down, then you take a short position. The traders can also make a profit when the market is falling. One of the biggest differences in futures trading is leverage. Leverage allows traders to control a larger position with a small amount of money. For example, if you use 10x leverage, then $100 can control $1,000 of trade. This can increase profit, but with that, it increases risks. Differences between spot and futures. Spot trading, you can actually buy crypto. Lower risk compared to futures. No leverage required, suitable for beginners. And futures trading, you trade contracts but not actual crypto. Allows leverage, higher risk and higher reward. Used by advanced traders. For beginners, spot trading is usually a safer option. It helps you understand how the market moves, how to manage investment, how crypto trading works. Future trading should be approached carefully because it involves risk. If someone decides to trade futures, risk management becomes very important. Some important tips. Never use very high leverage. Always set a stop loss. Never trade with the money you cannot afford to lose. Understand the market before trading. Both spot and futures trading play a very important role in the crypto market. Spot trading focuses on owning assets, while future trading focuses on predicting price movements. Understanding the difference helps you choose the strategy that suits your experience and risk tolerance. If this video has helped you understand spot versus future trading, then like, share and subscribe to Cofinix Exchange for more such simple educational videos. See you in the next one.